something with work. All right, so anyway, I think we're going to be okay here. All right, guys, it's Angelo Christian Live. Thank you so much for tuning in on my channel. Anyway, I wanted to finish this up because I believe even though with technical difficulties, if things happen, you never stop, you never give up. So I appreciate you guys staying tuned and watching the channel. Like I said earlier, some great things to talk about tonight. What's going on in the market. Interest rates are at all-time lows. The market's really, really hot right now. And so what I was talking about earlier, before I got called away, I had to take care of an important file on a customer, so the things I want to talk about and address tonight is, I think it's very important, the first thing is, hey guys, good evening. How is your, good evening. Hey, how's it going, OC Cabbage? So the biggest thing I want to talk about, I think is very important in life and in business is, you guys know who you're working with. You know, I've been doing lending for over 20 years. I've been actively lending in America, specializing in all different types of loans. We do non-QM loans. We do fully documented FHA, VA, USDA conventional loans. We do private loans, hard money loans. It's where America goes for funding. And the things I want to talk about tonight, the three things I think are very important, is understanding the home loan process, new products for 2021, and what you can do to boost up your credit score to get a lower interest rate. These are three of the biggest things that I want to cover tonight. So can everyone hear me okay? Just give me a big thumbs up on the YouTube channel. And remember, if you guys have any questions, you can always call or text my office at 832-431-6331. If you need anything, please feel free to reach out to us. I'll make sure everyone can hear me okay. So the biggest thing that, and if you guys ever, you know, we work really hard. We produce. Hey guys, good evening. Hey, how are you? Anna DeLucia. Hey, when you do my home refi, can I get both? Ask that question again, Anna. I'm sorry I missed that. I'm so sorry I missed your question. Ask me that question again, please, because I didn't see that. Hey, Philip, how are you? Good to see you. Hey, Sky, how's it going, everyone? So the biggest thing that you guys, you know, you can follow my YouTube channel, Angelo Christian Mortgage. We produce 4 videos over there every single week, Monday, Wednesday, Friday, Saturday at 6 a.m. You can also see them on my Instagram, official Angelo Christian. You know, we're a nationwide lender. We do commercial, residential, private loans, no-doc loans, FHA, VA, USDA. We really try to go the extra mile to help people. So really appreciate everyone following us and watching the channel. Thank you guys so much. The big thing that I wanted to talk about tonight, and remember, every Thursday night, 7 p.m. Central, talk with Angelo. You can call or text my office, 832-431-6331. But the biggest thing that I want to kind of go over with you guys, and yeah, ask me any questions that you want in the chat box. Feel free to give me any questions, open forum. Give me a big thumbs up. Share this with anyone that you know that's looking to get funding for a loan. But yeah, the biggest thing that I want to make sure that everyone understands when you're getting a home loan is understanding the home loan process. Guys, the home loan process, depending on the type of loan that you're doing, can be very cumbersome. There's a lot of requirements. There's a lot of people involved, a lot of players, appraisers, title companies, realtors, brokers, builders, lenders, inspectors, and anyone in that juncture, in that process, can drop the ball and can affect your closing or ask for more requirements or more documentation. It's just part of the process. Hey, what's up? How are you? Good. Thank you guys so much for asking questions. I will get to all your questions just as soon as I can. I just wanted to put some stuff out here to start talking because I want to make sure that everyone's on the same page, that us as your lender, we love you guys, we care about you, we want to help get your loan closed, but we don't have the final say-so in getting your loan closed. There's underwriters, there's regulators, there's laws in place, and all these things are there, and we can't force any of these things to, you know, just to close your loan. And so I want to make sure that when we're doing this process together, that you guys realize and that you're aware that we're in it together. We're on the same team to get your loan closed. We have to appease an underwriter, and we have to make sure that the loan meets the compliance requirements and quality control to be able to close the loan. Even though everyone's in a hurry, They want to get their loan closed. It just doesn't work like that. We all have to work together, and it's the same team, same dream. So I want to put that out there because I don't want you guys to be upset with me if things don't go as you planned, because maybe the property that you bought doesn't pass inspection. Maybe the seller doesn't agree to pay your closing costs. I don't know. But all we can do is work on it together the best that we can to try to get through it, so we can get you closed, so we can get you a great loan. Okay? And you guys have to know that. I love all my customers very much, and I care about you guys dearly. But I'm not in this business. There's so many players and parties involved that I don't control the whole process. I can help to, expedite your file to a certain extent, but it still has to pass muster with an underwriter, and there's compliance and there's regulations. So I want to just talk about that because I want to make sure you guys are on the same page about the expectations of getting a home loan in 2021, that your lender just can't just push the file through and close their eyes and take any type of shortcuts. It just doesn't work like that. So just want to put that out there because we're going to do everything we can to get your loan closed, but there's other parties that are involved. So just want to talk about that. So anyway, yeah, any questions that you guys have, please feel free to let me know. Remember, I give away a free $100 Amazon gift card every Thursday, 7 p.m. Central. I'm going to ask you a question and see who can answer. Somebody asked me a good question earlier about the difference between a charge-off and a collection. And charge-offs are not actually counted against your credit. They're not counted against your debt ratio. They're not counted against your loan. Okay? So, which is really cool because, normal collections are actually go into your debt ratio and they affect your qualification. But charge-offs do not. Hey, what's your question? Hey, what's up, Percy? Hey, Angelo, you guys still doing no-doc? Yes, sir. We specialize in no-doc loans. Thank you for asking the question. I appreciate that. That's a great question. So, what is your question? What is considered a good conventional? Great score for conventional, I would say. If you could get 750 or 740 or higher would be ideal. 800. Now, obviously, you may not have that 680, 700 score or higher is what I would recommend. So for a credit score or higher, the higher that you can get, the better. So, but those are great questions. But yeah, the person was asking me, I forgot their name, but they said, hey, if you have charge-offs, is that going to affect you from getting approved? Hey, good evening. Hey, Kevin, how are you? Good to see you. So charge-offs are not going to affect you from getting approved for your loan. All right? We omit those when we qualify you for your loan. Now, collections, those go into your debt ratio. A collection means the collector is coming after you, and that they're going to factor it into your debt-to-income ratio, but a charge-off is omitted from your debt ratio. And you can still get a home loan even if you have a charge-off. Okay? So just keep that in mind. It's a great question. What's your question there? 663. I would recommend a 700 for conventional. SC, a charge-off is like, let's say you had a credit card with Discover, and for whatever reason you stopped paying it. Well, Discover, what they'll do is they'll charge it off on their books. Let's say it was a $5,000 credit card. They would write that off on their books, and it's called a charge-off. So that means that that's charged off, and they wrote it off on their books, and they're no longer, they could still pursue you, but they've written it off. A collection is different. That's like when, let's say the Discover sells that debt to Midland Credit Management, which is a collection agency, then Midland will come after you to pursue that debt. Now they're coming after you, they're a collector, and that's a collection, and that goes into your debt ratio, and usually it's a 5% multiplier times the loan balance to determine how much the monthly payment is for your qualification. Okay, so that's how that works. There's a difference between a charge-off and a difference between a collection, and those are the differences. Okay, but great questions, guys. Those are really, really good questions. And so, yeah, ideally, for conventional, I would say 700 plus is ideal. I would just, and debt ratio. You're welcome, SC. Thank you for asking the question. So, the other thing that for 2021, I think that's really, really, it's a hot market. It's smoking hot. We talked about getting a verified pre-approval. It's critical for your loan. Just don't do a pre-qualification. Get all of your documentation over to your lender so so you can get fully approved for your loan. Because, sellers, they're only taking serious offers, people that have been approved, their income, their credit, their assets have been verified. So make sure if you're getting a loan from us, get all your paperwork into your lender so you can get a verified approval and then quickly get a loan commitment. Remember the 4 processes to get in a home loan: pre-qualification, pre-approval, verified approval, loan commitment. The 4 processes to get in a home loan. Always remember that when you're buying a house and know what stage of the process that you're in. All right, very, very important, because what you don't want to do is think that you have a loan commitment and you actually only have a pre-qualification, or think that you have a loan commitment and you actually have just a verified approval, because it could affect you with your realtor and the seller's agent. And seller's agents are looking for loan commitments. They look for verified pre-approvals. What's your question there, Teresa? My DTI is 3%. Yeah, I mean, but 660 is not bad for FHA. But if you want a conventional loan, yeah, you want to get as high as you can. 700 or higher is more preferred. So great question. How do I go from a pre-approval to a verified? You would want to ask your lender, and you probably just want to send them over like bank statements, updated pay stubs. It means they verified the information, right? Obviously, they probably check your credit if they did a pre-approval, but it's just verification processes. Verify the approval letter, verify the bank statements, verify the assets, verify the pay stubs. These are important topics, okay, that I highly recommend that you go through to make sure that you get the best loan that you can, right? Because what you don't want to do is get to the loan process and then your stuff hasn't been verified and the underwriter has a problem with it, and then maybe you don't get your loan commitment. You don't want your loan to get denied. You want to make sure that your loan can get approved, right? That's very important. So very important thing to make sure that you go through the underwriting process, get all your information in, make sure you get pre-approved in advance. Very, very important. You guys know we shoot great content on our show. What's your question there, Anna? When do you do my refi? Can I get a home improvement loan? Possibly, Anna. If you have equity in your property, you can definitely get cash out. You go up to 80% on a cash out. So it's definitely possible, Anna, that you can get a home improvement or cash out for whatever. You can go up to 80% loan to value on a cash out refinance. Remember that, guys. FHA conventional up to 80%, VA up to 90% for cash out refinances. Okay? So, and then, yeah, I mean, a hard money, 50 to 60%. Private loans, maybe 70%, 75%. Cash out loan to value. I'm talking about the loan to value ratio. Whatever the property is times 75%. Is the 203K loan? The 203K loan, some lenders are still doing it. It's been suspended with us since COVID. It's an okay program. The one thing about the 203K, I mean, it has good intentions, to get home improvement, fix up the house, and that's cool and everything. But a lot of lenders, they didn't do it because it's a tough loan to manage. You have to have a manager draw escrow, manager rehab, manager build out. Those loans inherently have higher interest rates. I'm not against them. I think it's great. You want to do a fixer upper. I think it's kind of cool, to do a 203K. I think just make sure you use the right contractor. But I think it's kind of a neat thing, So, but yeah, those I think some lenders started rolling them out again. We're not doing them right now. We may do them later. Just stay tuned for that. It's a great question, though. I appreciate you guys asking me that. So, and then we talked about some of the hot loan programs for 2021. You have USDA 0 down, 100% financing, jumbo loans with no loan limits. You can get a jumbo loan with no loan limit. You can go up to $1 million, $2 million, whatever, $1.5 million, 800,000, no PMI, no money down, 100% financing. You got to pay your closing costs, but that's it. So it's a really, really cool program for jumbo VA to get 100% financing. We talked about conventional first-time buyer. What's your question there, Phyllis? Good evening, Angelo. How are you? Oh, so happy for you, Phyllis. Yay! So happy for you, Phyllis. Awesome. I'm so proud of you. You made it to the finish line. So, no on my opinion. Okay. What is no on my opinion, Mr. Cabbage? So, but yeah, I mean, these are things that I think that are important in life. That you pair up with the right lender. We try to do everything we can to help people to the best of our ability, to get them the funding, to get them the loans so they can close on their property. Oh, yes, congrats. Yeah, congrats, Miss Phyllis. We're proud of you, honey. You did it. So, and you did it. We were just here for you. So, what qualifies USDA? Qualifications for USDA, you have to have a 620 or higher credit score. Yes, 620 or higher credit score. Debt ratio below 43%. No bankruptcies or foreclosures on your record in the last 3 years. Thank you, Phyllis. We love you, honey. So, and then the other thing is that USDA, it has to be fully documented. So you need tax returns for the last 3 years. It's just the way that loan program works. I don't make the rules, guys, on those. The USDA requires 3 years of tax returns. They don't like it if you have charge-offs or collections on your record. They want that stuff paid. I mean, if you had extenuating circumstances, possibly. But they really want that stuff to be paid and settled. So just keep that in mind. It's a great program. It's 100% financing, no money down. You can even get your closing costs included. So that's an awesome thing. I helped a customer today in Forney, Texas, and his builder, he went and tried to buy a house from a builder. Oh, thank you so much, Phyllis. We love you too. I hope that you do well with the loan. I hope that everything helps you to get you where you want to go with your property. Oh, no problem, Cabbage. You're good. Don't worry about it. It's all right. It's all good. So, so what I was saying about the USDA, yeah. So it's 100% financing. I helped a client today in Forney, Texas, and his builder, he was getting a new home construction. His builder was trying to make him go conventional, and was going to have him bring $15,000 to closing. He called me and said, "Hey, Angelo, can you help me? I don't have 15 grand." I said, "Hey, yeah, why don't we do a USDA?" He's like, "Well, what's USDA? The builder never offered that to me." I said, "Yeah, you qualify for USDA 0 down 100% financing. You don't need to put 15 grand down. You can get a 0 down loan." So there are times when the USDA comes in handy and it really helps people. And in this case, it really helped the guy to get 100% financing, no money down, because he was in an area that qualified. He had great credit, he had low debt, and it was a no-brainer situation to go USDA. So USDA is a really, really cool program, and it can help people a lot, that don't have a lot of money put down. And I think it's great because it's low interest rate. He got a 2.8 rate, so you can't argue with that, So not everybody qualifies for it, but it's a really, really cool program. And I when I started in the business, well, kind of like in my I'd say mid part of my career as I got into USDA. Yes, good question, Gemini 53. So student loans, yes, they do affect your credit score. What are some hot loans for investment properties? The biggest thing that's a great question too. Hot loans for investment properties. It depends on if you're doing a permanent loan, I recommend doing just a long-term bank financing. But it's fully documented. You have to show your income and have excellent credit, but you can get low rates in the 3s on investment properties. If you can't verify your income, then you can do a no-doc loan, like a private loan, and you don't have to verify your income. Okay? But then the interest rate is going to be higher. Interest rates are usually about a point higher, 4 to 5%. Okay? So, but those are some hot programs. If you're doing fix and flips, we have lines of credit. You can use those in lines of credit for investing in properties. Monique, do all government loans require collections? No, Monique, you don't have to. No, so that's what I was saying earlier. So Monique, for collections don't have to be settled. They go into your debt ratio. They take whatever the collection balance is. Let's say the balance is $2,000. They multiply that by 5%, and that payment goes into your debt ratio. Now, if it's medical, it's omitted. Charge-offs are omitted. And I have a bunch of videos and podcasts on charge-offs and collections because no, I don't want you thinking that it's going to hurt you. There's a lot of ways around that. Um, but I think the other question I had was, oh, student loans. Yes, student loans, they do go into your debt ratio, guys. Now, there are products like, for example, conventional loans. Conventional loans, also, you're welcome. Thank you, guys. So, yeah, you don't have to, well, yeah, you don't, yeah, can charge offs, they're charged off. Conventional loans, they can omit how long, charge offs and collections stay on there for 7 years. They can't, now remember, after 4 years, they can no longer sue you for the debt. But after 7 years, they're supposed to delete it. After 4 years, they can't sue you. So anyway, on USDA, they do go into your debt ratio. They take 1% of the student loan balance and multiply that by the balance. So if you have $100,000 in student loan debt, they multiply that by 1%. It's $1,000 a month. Ouch, right? Or you could do an extended fixed payment plan, and that's like a 25-year amortization. And generally, that payment would be lower. And that's normally what we have people do, is go into an extended fixed payment plan to get their DTI lower. Okay, so great question, guys. So but yeah, I mean, now conventional, you can get them omitted if you either get a deferment for 1 year out, or you go into an income-based payment plan. So you have a lot of options with conventional loans. FHA follows USDA. VA, you can do a deferment. So, hey, John, how are you? Home and land package. Right now, John, we're not doing land and home packages. We may do those again in the future. Unfortunately, I wish that we could. It's just, so my thing is this. I mean, and obviously we're a growing company, and it's great to have a lot of programs, but if you can't deliver or fulfill to your client, it's not worth it. And my thing is that I'm trying to build out a great culture, a great company, and great service to help my clients. And I'd be doing a disservice to you if I just rolled out that program. I don't have the people or the infrastructure to help you to do it. No, we're not doing them. I like the land. Now, my plan by late this year or early next year, we are planning to do that, because I believe in construction loans and getting people the funding to build on their property. I think that's a good thing, and I really like that. I admire that a lot. We're not doing it right now, but later on we plan to. So I appreciate you asking me. That was a great question. There are probably other lenders out there that do them, and we will plan to roll them out later. We're just not doing them at this time. But anyway, so the other thing that I wanted to talk about is, like I said, about the economy. The economy's smoking hot. I'm not foreseeing any crash anytime soon. Interest rates are at lows. Housing prices are skyrocketing. I recommend to buy your house before it gets too late, before home prices go higher and higher. Remember, if you have any questions, you can always call or text my office at 832-431-6331. I really appreciate you guys for reaching out. And then now I'm just going to ask you the bonus round question. Every Thursday, 7 p.m. Central, Talk with Angelo. We give away a free $100 Amazon gift card. And so the question that I have, and whoever answers it first, I want you to text me your email address to 832-431-6331. Okay, and I'm going to email you that free Amazon gift card. I want you to tell me, crypto? Yeah, crypto is awesome. I love crypto. I think Bitcoin is phenomenal. And I bought Bitcoin. I bought one coin in 2018 for about $10,800, and I held on to it. I went to this event, this trade show thing with Ty Lopez, actually. And he's like, the guy was there. And he's like, well, just, buy one Bitcoin and just throw it in your wallet and just hold on to it forever. And I bought one. I didn't even know what I was buying, really. And I still don't. I mean, I have a little bit of understanding, but I'm not, a deep crypto trader or anything like that. I admire it. I think it's really, really cool. Oh, Dogecoin? Yeah, I'm not. I know. I'm so busy with mortgage, man. I'm not up to all the cryptocurrencies. So, yes. So I think they're cool. I think that's very interesting, and I think it has a lot of potential, for the future. So, but great question, guys. Great question. So, but yeah. So, let me get this money out to you guys. So, the question I have for you for the $100 gift card is, what's the difference between a charge-off and a collection? What is the difference between a charge-off and a collection? Explain that to me. Whoever explains that first gets a free $100 Amazon gift card sent to them tomorrow. So what's the difference between a charge-off and a collection? Please answer that question in the chat box. Whoever answers that question first is going to get a free $100 Amazon gift card emailed to them. So what's the difference between a charge-off and a collection? So who can answer that question? So who's going to answer that first? So charge-off. That's right, Big JD. Big JD got it again. Oh my God, Big JD, you cleaning up, man. Big JD got it. All right. Big JD, he's got it, man. So he answered it first. I think how many times have you won, Big JD? Oh, Joseph, you got it too. You did good. Big JD, man, he's the champ, man. How many times has he won the I think you won like 3 times now, huh? Twice. He's good. He's sharp. He's sharp as a tack. He's cleaning it up. He's closing next week, and he's getting his gift card. He's raking it in. So that's good. That's good. I appreciate you guys watching us tonight on the channel, on the show. It means a lot to me. Obviously, if you are closing, you follow the process, and congratulations. I got to commend you. If you are watching the show and you are closing on your loan, I'm going to tell you it's not easy, and I don't want to pretend that it's easy to get a loan closed. There are some loans that are easy to close, but most of them are not. Thank you, brother. We appreciate you. We love you too, man. All the best with you and your family. So, loans are tough. They're not easy to close, and I don't want to, think that I mislead people in any way. You got to follow a process. There's an order, probably like at your job. I know a lot of people that watch this channel, they got tough jobs too. Construction, military, nurses, doctors. Yes, Big JD, he's sharp. So the point I'm trying to make that I want to finish with is that we all got a job to do at the end of the day. PA, paying charge-off. No, paying a charge-off is not going to lower your DTI. It has nothing. It won't even affect your DTI, actually. They don't even look at it. So other lenders are different. I'm not speaking for every lender. But they should not be counting a charge-off towards your debt ratio when you're getting a federal loan. Okay, if they are, they're doing something wrong. They shouldn't be hitting you with into your debt ratio. But no, I just, the thing that we all got a job too. All of you guys watching this show got a job. I got a job. And there's rules, there's laws, there's requirements, and we all got to follow by those. I can't change those, and I don't make the laws or the rules, and so there's things that we got to abide by as lenders, and there's things that you guys got to abide by at your job. Some of you guys work for the government and law enforcement, all these different things. You guys know how it is. We all got to follow these codes of conduct and requirements, and so the only reason I'm saying that is because we can't, and just like at your job, you can't take any shortcuts just to kind of push it through. We can't either. We're all on the same team. Ishmael, it depends how long have you been 1099, Ishmael. Call or text me 832-431-6331, and I can talk to you about that. It depends. That's a great question. So I'm going to make a video on that. That's a really good question. I'm glad you brought that up, Ishmael. I'm seeing a lot of this 1099 and W-2 stuff. Can you claim income on cash? Yes, you can. You can claim cash money as income. Absolutely. Self-employed. So, great question, though, tonight, guys. You guys inspire me all the time. You guys inspire me to make new videos. I started making videos in 2016 for you guys. Okay? because people kept asking me the same questions, and I said, I'm going to make a video and explain what FHA is. I'm going to talk about USDA. I'm going to talk about credit. And that's why I started making videos for you guys. So you guys always inspire me to make new videos, and it means a lot to me that you guys follow and you help and you reach out and you trust me to help you, and it's awesome. And it's an awesome synergy, awesome opportunity. I'm grateful for all of you guys for always tuning in and watching Angelo Christian and being a part of it. And my whole thing is just making your life better. How can I make your life better? What can I do to help you? And I might not know you personally, but through this YouTube, through this device, we're connected. We're all spirits. We're all connected by God, and I do believe that. And so really appreciate all you guys reaching out. I want to wish you and your families the best. I want you to be successful in 2021. Big JD will get you your gift card right away. Keep watching Angelo Christian every Thursday, 7 p.m. live. Take care. God bless. Make the most of yourself. We love you. Bye-bye.